literacy efforts. And I can tell you, because I've been involved too, the Securities and Exchange Commission engaged me as a lead consultant, with respect to their effort to include capital market studies in the curriculum of secondary schools in Nigeria. They are doing that in conjunction with the Nigerian Education and Research Development Council. So I know that has gone far. So financial literacy is there. Financial education, efforts to include them in school curricula, those efforts are also being made. So consumer protection is key. The other thing I also know that will fast track this issue of financial inclusion is the agent network thing, I mentioned, which is very paramount. I am also aware that the CBN has signed memorandum of understanding with the deposit money banks, super agents, mobile network operators to roll out aggressively 500,000 agents by 2020. As I said, that works out. I said earlier that works out at about 476 agents per 100,000 of the population. So one of the challenges of financial inclusion in Nigeria today is the insufficient agent network. It is the fact that a lot of people don't have a means of identification. There is no national ID card for everyone, which is also why I think the National Identity Management Commission is also working to ensure that everybody gets this ID by 2020. So if we have national ID, if KYC requirements are simplified, if consumer protection is strengthened, and of course on the supply side, I'm also aware that a number of banks are coming up with products that are targeting those underserved or those unserved or unbanked population. The microcredit, micro products, are being encouraged. The PENCOM, for example, I'm aware PENCOM is about implementing the micro pension scheme. The micro pension scheme that is targeting the informal sector, to be able to bring them in, to onboard them, into the pension scheme. So those unique products are good if we must attain financial inclusion. The same applies to non-interest, or if you like, Islamic products. I'm aware that some financial institutions too have come up with the Takaful. Takaful is a form of insurance that is Islamic Sharia compliant. There is, of course, the Mudaraba. Mudaraba is also a product that you give to people who have a quarrel with the riba or usury or interest rate. So they embrace it because the profit sharing arrangement. So I know some financial institutions have come up with some of these products, but of course we need to upscale them. The successes that we've recorded in this country with the introduction of Sukuk. So what I'm saying is that on the supply side, we should have a variety of products to meet client need, and on the demand side, we should continue to educate them, use financial literacy, and target particularly the vulnerable groups, the women. The statistics I gave you now show that women are financially excluded. And again, if you look at it geographically, northeast and northwest, the report says southwest has the least financial exclusion rate of 18%. The highest rates are northeast and northwest, ranging between 62 to 70% exclusion rate. So that means we have to also address those issues. And part of why the exclusion rate is high in those areas, of course, has to do with the security situation in those areas, particularly northeast, and of course, cultural and religious beliefs. And these cultural beliefs or religious beliefs, one way to address them is to come up with products that you think that this class of people, can
all right, Professor Waleke.
The revised strategy has identified objectives, has identified, targets, that are or that were not there in 2012. So I think it's a good document that if implemented, especially with government support, will go a long way in ensuring that we'll achieve that target. Even if we don't hit the target of 80%, but we'll have gone very far at least Kenya, as I mentioned earlier, has 84% inclusion rate. So we can, I think Nigeria can do 80 by 2020 if all these barriers are cleared.
All right, Professor Waleke, ease of access, of course, to formal financial services is a major component of inclusion, I want to believe. Now, many SMEs still complain of lack of access to bank credit. How does this new strategy address this issue?
Yes, Chimeze, of course, you know that when we talk about financial services, the banking is key. That's why it's a major indicator. When people talk about financial inclusion, they often use the banked and the unbanked as a measure of financial inclusion. But I just mentioned now that we have other products. It's not just the banking products. Insurance, low rate penetration is still a problem. Pension, capital market products, they're all there. But returning to access to banking services, how is the strategy going to address that? I mentioned one very important thing there, which is the know your customer requirement, the cumbersome know your customer requirements. The strategy is recommending that should be simplified to enable people who don't have, so if you want to open an account today, they ask you to go and bring utility bill, they ask you to go and bring this, go and bring that. Okay, that in itself is a discouraging factor, particularly if you want to do as low as 20,000, because the three-tiered know your customer requirements released by the central bank has low level, medium, and high level. That's the three-tier. For the low level, that's 20,000. You can deposit. Of course, cumulatively, not more than 50,000. And as I said, when you want to do that, you don't need any money to open an account, and then all you need to do is just to mention your name, provide a passport. So the process is simpler. The other thing I've also mentioned here, which will also improve access, is this idea of branchless banking. Okay, we don't need to have physical branches in all the rural areas. It's not possible. It's not even economically viable. Okay, but with branchless banking, okay, it's easy to catch more people into the financial net without necessarily going there. And branchless banking includes the use of agent banking. Agents are no more than a business correspondent. You can call them business correspondents. That assist the clients to do basic banking transactions, such as
Professor Waleke, we really do not have Professor Waleke.
But there is something I want to say.
Professor Waleke, we really do not have much time. Well, just before I let you go, we really do not have much time. Just before I let you go, how does this financial inclusion strategy connect with the government's economic recovery plan?
Yeah, thank you very much. Well, it's also connected with what I have to say. I hope I will have enough time to explain it. Okay.
1 minute.
The Economic Recovery and Growth Plan, of course, has three broad objectives. Aside from the economic recovery, which is the first objective, you also have investing in our people. And of course, the other one talks about a competitive economy. Competitive economy cannot come about if your financial system is weak. If economic recovery, if you even go down to the priorities, execution priorities, the first one is macroeconomic stability. And you can't have macroeconomic stability if the transmission mechanism, for example, of monetary policy is weak. And the financial inclusion, what it does is that it enables the central bank to implement monetary policy, to adjust interest rates, to the level that it deserves, in order not to subdue inflation and inflation expectation. So it will help monetary policy. It will also help in empowering medium to small scale enterprises. By the time
Professor Waleke
now key in, of course, they have access to
Professor Waleke, we may just have to leave it at that point. I know you have quite a lot to give to us, and of course, it's a continuous conversation. I hope we will have time, some other time, to look into it better. Thank you for your time. Professor Uche Waleke is a professor of finance and capital markets in Nasarawa State University. But we'll take a break, and when we come back, we'll look at MPC considerations and policy options as meeting commences today. To stay with us.